Thanks so much for tuning in. You're watching BQ Prime. My name is Alex Mathew, and we're talking about markets. We have been talking about markets in a great amount of detail since Monday because the selling continues. But there are some elements of the selling that you're seeing today that are different from what you saw on Monday. And there are certain things that will help put things in perspective. Joining me to talk about those very reasons are Niraj Shah, the markets editor, and Agam Vakil, who specializes in taking a look at the F&O space and trying to glean from that what really is happening. Niraj, we've spoken.
No, let's put him in a spot.
Let's put him on the spot first.
Yeah.
Okay. So we were speaking, Agam, at the start today as well, before the market started, that the texture or certain aspects on Monday were different from today. And that had to do with the volatility index.
Right.
It came off on Monday despite the frenetic selling, and then it ended in the green. Today, it is up quite substantially.
Right. So, Alex, whenever you see benchmarks come off by around 1.5% on an intraday basis, typically what you see is the India Volatility Index move up by around 5 to 6%. What this means is basically a lot of those traders are going ahead and buying puts, and when they buy puts, the premium increases, and hence your volatility increases as well, because that's how the WIX formulation is made through. When it comes to trade on Monday, that did not come through. So while we did see the benchmarks move down by around 1.5%, the WIX moved up by less than 0.5%. So a lot of traders thought that perhaps this is the end. This was, a little bit of finality in terms of profit booking, since we've already seen the Nifty come off from the marks from the levels of well over 20,000. But come today, we have seen further sell-off, and today is the day where, with just about 0.7% or maybe nearly 1 percentage point decline, the India Volatility Index has moved up by as much as 10 to 11%. This means that now traders are taking aggressive bets towards the short side. They're most likely buying puts very aggressively, and they're also selling calls similarly very aggressively. We have to remember one thing as far as Monday's end of day data goes. From the FII standpoint, while they did buy in the cash markets, they were only 26% long in the index futures in terms of positioning, which means 3 out of 4 positions taken, or rather at the end of the day, were towards the short side. So that is something that plays out very usually in something where the markets are weak, and perhaps that is something which is playing out against the markets as well at this moment.
I will circle back on the key levels based on what we've seen in trade today. But Niraj, we've spoken to quite a few very big names in the markets as well, and a variety of aspects spoken about from the global factors at play. Bond yields, you pointed out in the trade setup today, come off quite substantially from that 5% mark. So what really is the reason for this kind of pressure?
At the outset, Alex, I was completely right on Monday, and not that we are in the business of predicting, but what we read and when we tell people about what could possibly happen, bang on Monday. Today, the belief was that these are green levels from where we could actually see some bit of bottom formation happen, and maybe for a better part of the early morning trade, it may have looked like that. But the global markets are coming off. So the Dow futures were in the green. When we did the trade setup at circa 8 a.m., they are now in the red. European markets are mixed with a bit of a tinge of red, slightly louder than the tinge of green. So the global markets are coming off, and on the back of a day wherein we've had such a manic trade, which was Monday, wherein the mid caps and the small caps completely tanked, a whiff of fear, and you might actually see the broader end of the spectrum come off a bit more. The fact that we are also below 19,100 is another story at all. And maybe what Alex, what Agam is saying is about one, the F&O action, and we'll get an expert to talk about that. But two, certain stocks are also falling below key levels. HDFC Bank is now sub 1,500, 1,497. I don't think we've seen that in a really long time. So a bunch of index heavyweights too are coming off. I still think that a larger part of the correction that most people were talking about are done, and most people are saying that a little bit of pain here and there. 100 points is not alarm bells.
Yes,
a little bit of pain here and there, but these are around the levels from where contra trades could actually make you money.
And let's, in fact, get a specialist in the technical space to come in and talk about some of those levels as well, and maybe a few individual stocks as well, as you were pointing out. We're joined by Rahul Sharma, who's Director and Head of Technical and Derivative at JM Financial. Rahul, thank you so much for taking the time and speaking to us. Did you anticipate this? Because if I remember correctly, you were talking about 20,400 levels to watch very carefully. It's come off quite substantially from that point. And what levels are you watching out for now for the benchmark index?
Yeah, very good afternoon. So this seems like finally we are having a capitulation on the current down move. So until 2 days back, it was the mid and small caps which were holding back and not giving up the gains. But Monday's session and today's session is clearly indicating that the broader market has started throwing away the internal strength that it had. Now, in terms of Nifty, there is a very good possibility that around the 18,900 mark, we eventually see a bottom happening, and from there on, we see a slow, gradual recovery happening in the month of November. Now, there are a couple of things to keep an eye on. Whenever data gets extreme, that is exactly when we've seen markets reverse in the past. So we had the India VIX data on Monday hitting a new low. We've had a lot of shorts by FIs. Now that has still not probably reached the extreme levels like 12%, 15%, and the likes. If that happens, and the third one which I speak of is the Nifty RSI. So Nifty RSI, as we speak, has come very close to 30 in the last 2 years. In fact, even in a bigger history, every time Nifty RSI has gone below 30, it has been like a deep value zone for like positional traders, and markets have reversed from there. So my sense is because of the monthly expiry, this could be getting aggravated today. But around 19,000, 18,900, the risk rewards again turn favorable for a recovery, for a reversal from those areas. So we are advising our clients to stay put. In case you have delivery positions, do not sell them at this point in time. Those looking for a reversal, the best thing to do is let this monthly expiry happen. Post that, once the rollover data is clear, once the FII versus retail positioning is clear, that would throw light, whether we should see a full-fledged reversal or not. But at this point in time, 18,900 seems like a very high probability where we should bottom out in the next couple of sessions.
Right, Rahul, because of weekly expiries coming through, a lot of the data now gets concentrated around expiries specifically. And of course, tomorrow is a big one because tomorrow we have the monthly expiries for the Nifty as well as the Bank Nifty, which is why a lot of the index options as well as the index futures data also gets very concentrated and and becomes all about a little more relevant with respect to tomorrow's expiry. My point then is that if we look beyond tomorrow, what are the factors that you would be watching out for in terms of anticipating perhaps some sort of short covering, perhaps some sort of relief as far as markets are concerned as we move into trade next week?
So if you remember the last monthly expiry that we had, it was clearly the longs unwinding their positions. And then in October, we had like a very brief period. We saw the Nifty do well. And then finally, we saw a correction happening. Now, the biggest short covering or, closure of shorts could be the monthly expiry itself. So all eyes will be on the percentage rollovers that take place. If the market-wide rollovers or if the index rollovers or even if the component rollovers of the index are lesser than the 3-month averages, that would indicate that the short positions have been booked, and at the same time, those who are holding longs have seen their positions getting closed out. So we are keeping an eye on the absolute OI. If it is absolute rollovers, if they are on the lower side, that would bode well for the bulls. Now, since you asked what should be the key triggers for the month of November. So in November, when we look at a top-down approach, we have US markets which formed this bottom. The 200-day moving average was broken before us. They hit an RSI of below 30 before us. So they've sort of gone through this cycle. So probably we are catching up with them. Once they start rebounding, which is what seems like seeing the last night's action in the US markets. So if they start rebounding, we should very well see a slow gradual recovery happening on the long side. Sectors to keep an eye on, I think auto is one sector where we are seeing that there is relative strength which has built up. So, consumption is another theme where we feel that as a defensive, it plays out well. And plus, with being November, festive season, World Cup, everything, that sector has a lot of tailwinds in terms of the sentiment goes. So auto and consumption are the two areas where we are seeing there is relative outperformance and should continue to do so in the month of November as well.
Right, Rahul, over the past 5 months, when it comes to the bank Nifty, we've seen levels and we've seen some very sharp swings around 43,500. That seems to be a little bit of a pivot. What's happened today is not only have we lost that level, we've also moved below and very, very prominently below 43,000. The question then is the bank Nifty a lot weaker than the Nifty at the moment? And should someone want to play shorts, should they stay put in the bank Nifty? And if there is a short covering rally, would there be a stronger short covering rally in the bank Nifty? What's your assessment here?
Yeah, so Bank Nifty is the one which is leading the market down, and this index has also broken its 200-day EMA in the last two trading sessions, which is Monday and today. And below 43,000, clearly this remains, even more dominant on the short side. So the bears have been having an upper hand in the entire month, and now finally they are seeing eventually these key levels getting broken out. So as long as we remain below the 43,000 mark, which is also the 200-day EMA, I think this will again continue to be a shorter favorite. But because this is also where there is significant shorts which are there on a relative basis as compared to Nifty in index positioning, this is where the maximum shorts are. So in case the markets do have to sort of, bottom out and bounce back, or bottom out and reverse, this is exactly where there will be massive short covering, which can see the banking index give big swings, not only on the downside as you've seen right now, but also on the upside as well. So, post expiry, it will be very interesting to see the kind of rollovers that happen in this index. And my sense is, if the index is still around these areas and the rollovers on the lower side, we could very well see a 1,500 point bounce back in a very short span of time in the banking index as well. So yes, it is oversold, but at the same time, this is exactly where there are maximum shorts being present. And if these are not rolled over into the next month, that would indicate a very strong up move on the upside.
Rahul, Niraj here, and thanks for taking the time. And I must say, while he had spoken about 20,400, he had also said that once hitting there could be a very sharp move down. So in some sense, he kind of got it bang on. Rahul, you sounding mildly constructive on a contra trade on banks. My question is, would you take it now, or would you take it in or around the levels of 18,900 that you said might be the bottom for the Nifty?
Yeah, I think it's best to take it, closer to the 18,900, 19,000 zone because, like I said, this entire month has been dominated by bears, especially when it comes to the, both the indices, and we are heading towards the monthly expiry. So there is a good chance that kind of action that we've seen today seems like capitulation, seems like positions are getting stopped out, and, there is pressure on the long positions, which is why we're seeing a very sharp down. And just a few days back, the markets were extremely lackluster. So the momentum has finally come back into the Nifty after like 2 or 3 weeks. So this is indicating that it's best that for this falling knife to play out, maybe we could wait for a session here and there, and at least ensure that at least Nifty has spent some time. But my sense is 18,900 roundabouts. Wait for a day or two. I think once that happens, we should see a Nifty coming out. So my sense is Friday should be an ideal day for me to be looking out for any sort of a reversal on the Nifty index.
Got it. Rahul, just one quick other factor, maybe educational in nature, but every global guest that we're speaking to are keeping an eye out for the yields, keeping an eye out for crude oil. Of course, and geopolitics. But my question is, do global yields and US benchmark yields in particular play any factor in your judgment about whether there could be a bounce in the Nifty, the bank Nifty, or for that matter, the ones which are taking the more brutal knock in the last 2 days, which is the broader end of the spectrum?
Yeah, it does definitely play a big role. I mean, everything.
So therefore, I'm just questioning, sorry, just a big paucity of time, but if the yields in the US would not bounce back, and if they drift lower, is that also building a case for a bounce back into Indian equities, particularly even the broader end of the spectrum, Rahul?
Yeah, so if they don't bounce back, even if they remain range bound and say crude continues to slip down, that should be at least not negative for India. and eventually we should see some bit of rebuild happening. So my sense is, if bond yields do not get worse from here, that should be positive news for the Indian markets.
I think that kind of puts a lot of things into perspective. Thanks so much for joining us and giving us that perspective on the levels particularly. And I look forward to chatting with you real soon, possibly maybe at the end of the week. As you say, we'll get some more clarity then. For now, just to close out
this,
this,
interesting.
Yeah, and just to close out this conversation, and I was asking you about this at the start, right? To put this into perspective and to again, Agam, we were talking about this at the start today. A little bit of this correction. We haven't seen these moves in quite a while. I believe September 12th, before Monday, was the last time that we saw such a crack in the broader markets. Right. But if you look year to date, it's not too much of a dent. We're still talking about 20+% gains for the mid cap index, much more than that for the small cap index.
But you know, the other way to look at it is from levels of nearly 20,300, 400, whatever you call it, right? We are down about 6-7% while being touted as the strongest market in the region, part one. Part two, and yes, there are reasons for that, valid reasons for that. But I'm just saying purely because the earnings season has not been blockbuster, but has not been negative in a bad way. So therefore, purely on a valuation multiple, India is certainly a bit more reasonable than what it was about, say, 8 weeks ago. So that's part one of the equation. And a lot of factors which can go wrong, which is higher crude prices, higher yields, etc., are near about or DXY. If they start reversing, then the ability of the market to bounce back, there is headroom to bounce back. You could not have argued for a bounce back at 20,400 if the same levels were stacked against you and then started moving off. If these start moving down now, then there is headroom in some sense for the Indian markets to give a bit of an up move. I said in the trade setup today that there are some quant indicators which are showing the patterns from where bottoms are formed. Rahul was speaking about 18,900. I don't know what derivative data is showing or what fund data is showing, but it certainly seems that it's kind of around levels from where you typically could see bounce.
By the way, that 18,900 mark is not too far away from the 200-day moving average for the Nifty 50, which is around that 18,820 odd mark.
Right? Okay, is that okay? I don't know that.
And you tend to see a lot of defending from the bulls when you start seeing markets come to around the 200 daily moving average. It is actually a very important level, even for those who follow fundamentals. That said, in the near term, we will be watching out for, as Niraj said, crude and the yields abroad. But remember that FIIs were positive in the cash markets on Monday despite that crack. And
it was a low volume day Monday.
And it was a low volume day. So, well, it's gonna a lot is going to depend on their positioning today and over the next few days as well. And as Rahul mentioned, 26% longs. It's not as low as 10-12% longs. That's when you start seeing short covering. So that's another factor they're going to watch for from an FII standpoint in the index futures bit.
And we'll know soon enough what the print is for today for the flows data. But I think let's hold out till then. Perhaps we can pick this conversation up maybe after closing, maybe in the morning when we start.
As we speak, we are at 19,136. So about 19,100.
We're off the day's low. Let's see where we end up at the end of today. Of course, if you've got specific questions for the gentleman next to me,
or either for Alex on Ask VQ,
either on the technicals or on any of the fundamental data that Niraj has spoken about through the day today, don't hesitate to write to us on the comments section, and we'll take it up either over the course of today or maybe tomorrow when Niraj does the trade setup. For now, we're closing this particular chat, but there's lots more lined up over the course of today. So stay tuned. This is BQ Prime.